Hello traders and welcome back to the channel. My name is Denny and I'm a Kenyan day trader. I started trading back in April of 2021. So this year, uh, April marked the start of my sixth year in trading industry. So I recently started a YouTube series where I'm documenting my process of getting funded with pro funds. Uh, and I can say that uh, I'm not yet a consistently profitable trader, even with 5 years of experience. So, first of all, I can tell you that I have had no pressure with my trading journey since I already decided when I started that it was going to take time to build the experience to become a professional day trader. So when I started this documenting series, I promised that as I show my progress of getting funded, I'm going to teach a thing or two about price action. And today is another episode where there's not much to update on my trading account. But yesterday I took some trades and missed on some other trades. But the goal of today is to review this uh, price action here, and also to we can start by updating you on the status of this Proform account. We are still in phase one, and I'm up 1.2% of the account. So yesterday, Asian opened. I tried to scalp this retracement up higher because, as you remember, when I was updating you on the previous video, I said if on Tuesday, if Tuesday daily candle closed bearish, then I was going uh, to be bearish on the daily time frame. So I also said that I was not looking forward to trade London session or New York session, and I was going to hunt entries at the close of London, which is at 5 p.m. East African time. So on Tuesday, I missed on this drop here because of some electricity inconvenience. No problem. There's an abundance of opportunity, especially on the gold market, since I have specialized on trading gold alone for now. So I missed out on uh, this price swing here, and then I started hunting again on Asian Open. So during Asia, I was looking for a retracement up higher to the equilibrium of the previous daily range. Okay, to start going looking for short, because as you can remember, I said if Tuesday closed bearish, then on Wednesday I was going to look for shorts. So this retracement was setting up the conditions for a bearish day. Okay, so I woke up in Asia on the 15-minute time frame. Let's go to the 15-minute time frame. On the 15-minute time frame, you'll see this fair value gap that was trying to trade from kind of retracement right there. So that was uh, my first buy entry, which I was stopped out. As you can see, my stop loss was below the low of this 15 minutes candle. But you can see I was stopped out for a 0.5% loss. I don't know why I changed. This was an impulsive entry where I changed bias and I was looking forward to a price taking out this or trading below this low right here. So I was stopped out here. Then I had a re-entry at around this level. I added up another trade at this level. We have this retracement, but you can see price was still above the 10 simple moving average. Okay, so I added a trade there, and I recouped the losses that I had taken on this trade. But I entered again, still looking for price to get to the equilibrium of the previous day's range, but I scaled out with a minor loss, tried to go short. Again, I bailed out because there was still some sign price was going to trade above this high. And as you can see, if I held on to this sell trade, my stop loss was above this high. But then again, I had a buy limit or a sell limit above at go to the lower time frame. I had this sell limit around. That's why I got out of this short trade that I had entered manually. I had a sell limit at 31.36, which was not activated. Of course, you can see we had a failure swing where this price swing failed to trade above this swing point right here, and price ended up dumping very hard. Of course, there was a fundamental catalyst where Trump, with his silly talks, I can say he took part in price drop in this hard. This is one of the most like times or uncertain times to be trading. So if you are holding buys, then you can imagine what this price swing did to your account. But then again, for me, the trade of the day was supposed to be this sell order that I placed right here and was not activated. So I ended up not taking any other trade for that day. But there were a lot of opportunity. This was a sell trade to trade below this low, but I was not interested in taking any trades since we head for MC at 9 p.m. East African time. So right now we are at 11 p.m. East African time, and just about 35 minutes to new day. So that's the update for this account. As you can see on the Fadin Pips dashboard, we are up $120, which is just 1.2%. And that's a drop from of about $60 from the highest equity high of $180. So today, today we had a loss of about $60 that came from trying to scalp this Asian session. But that is not a big damage to the accounts. It's just 0.5% of the account. So that's all on update on this 10K Pro account. Remember, on the Pro account, our target is to hit 6% on phase 1 and 6% on phase 2, with a maximum daily loss of 3% and a maximum loss limit of 6%. So if you're able to pass both phase 1 and phase 2, we qualify for a master account with a weekly or 7 days payout cycle. So if you want to get take an account with Funding Pips, if you log into your dashboard, you'll find this discount code where you get 20% off on all evaluation except for the 100 flex accounts. Okay, so let's go to the daily chart and review. Start reviewing here. If you can see my daily chart, you'll find that I had divided since the start of the year with uh, these 20 days cycles, and with the 20 days it includes weekends, that is Saturday and Sundays. If you remove Saturdays and Sundays, you'll find this it's just 14 daily candles. So my theory is every 14 days there is a price swing on the daily chart in every market, whether you are trading currencies, futures, commodities, any market. Every 14 days, trading days, there is a price swing in this market. So if you look at the previous, forget about the current cycle. If you look at the previous 14 days cycle, but in our case, it's 20 days, including the weekends, that is Saturdays and Sundays, 20 days. So you'll hear me a lot talking about the 20 day cycle. And if you are an ICT enthusiast, you'll remember he talked about in his concepts the 20 days if the 20 days if the data ranges. So it's the same thing around here, just that in his case, he thought that you start counting from the current daily candle. You count 20, 40, and 60 days for liquidity zone. But you see, in my case, it's just 20 previous 20 days ranges, okay, or cycles since the start of the year. So you start on the first trading day of the year, you count 20 trading days. Okay, you can see that is 20 trading days, but minus the weekends, we have 14 daily bars or daily candlesticks. So every 14 days in this marketplace, remember there is a price swing on gold. So that's one of the most, I struggled a lot with buyers in this while trying to learn how to trade, okay? But then again, I came around these 20 days if the data ranges. And then I can say it was not solved 100%, but I don't struggle a lot with determining buyers, especially since I focus only on trading gold. So you are going to take this tool on TradingView, put on the first trading day of the year, which was 2nd January, and then count 20 days. That is including the weekends. It will be 14 bars, 14 daily candles. At the end, we start the cycle again, 20 days. At the end of those 20 days, we count again up to where we currently are in price action. Okay, here we are now here. So using my 20 days if the data ranges, that's how I get the buyers. So like on this cycle, once it traded above the previous week's high, the target was now the previous week's low. You see, in this we haven't gone to the lower time frame or the 4 hour or those mid time frames or the 4 hours. Okay, we are still on the daily time frame, and you can see we have already had a big impact on the daily time frame on in terms of buyers on a higher time frame. okay, using these 20 days IBDA data ranges. So I want you to back test, okay? You put these vertical lines every 20 trading days, that is including weekends. But at the back of your mind, it is just 20 or just 14 bars daily candles inside that 20 days range, okay? And you are going to see how price trades in the direction of the previous cycle or range, high or low. So as you can see in this cycle here, once price had traded above the high, the next target was below, and every cycle the target was below previous cycle low. So which made it a bearish bias on the daily time frame. And we are led to get to my final target, which was this low right here. But of course, I haven't extended my previous all this the 20 days range to the previous year price action. Okay, but I would like to see price come to this low of 38.86. So on the current IBDA data range, 20 days range, you'll see that there's a common pattern you'll find in price action, and it's the fractal. A fractal is this 3-bar candle pattern. When you're bearish, you'll have a candle with the highest high, and on the left side and on the right side, you'll have two candles that have lower highs. Okay, so price traded above the high of this candle crossed bearish. The high of this candle failed to trade above the high of the middle candle, which made it a swing point or a fractal. So since my bias is bearish, I'm going to submit to the idea that we are trading in the direction of this bearish fractal. So every day that opens, of course, not every day is going to be bearish until we get to this low, right? As you can see here, price retraced, took the high of the previous daily candle, then dropped to this. Same as here, we are not just going to, we might drop with a few candles, but we are not just going to have every day as a bearish candle. The only way to have this invalidated if we have like 2 consecutive up close day without taking this low, then the bearish bias is invalidated, maybe for a short term, but my bias is still bearish to get to this low. So since today is tomorrow, today is on Wednesday, tomorrow will be on a Thursday. So my bias will be to see if price can get to the previous day's low, and I will be looking for trades into that direction. Of course, if I get some buy trades, it will just be scalps until we have like a daily candle closed convincingly bullish for me to change my bias. But as long as this swing point holds, my bias is still bearish. Remember, we have not gone to the short-term time frame or the lower time frames. We have not gone to the 4-hour time frame. We have not gone to the 1-hour time frame or the lower time frames regarding bias filter. So if you are bullish, you'll want to see this 3-bar candle pattern. Again, we have a candle with the lowest low right here, and two candles on the right, on the left. We have candles with higher lows. Okay, the low of this candle is higher than the low of this candle, and the low of this candle is higher than the low of this candle right here. So after this candle closes on this day, your bias is bullish. Okay, so there is no reason to be looking for to have a bearish bias on this day when we have this pattern already and it had already traded below these swing points right here. So what you will be looking for is a retracement to the equilibrium of this range right here. You see, equilibrium of that range, to continue looking for sell trades, since we are using the 20 days if the data ranges. This will be our next draw on liquidity, and the overall you can see is 38.86, but this leave this alone. This is my prediction. This is the current draw on liquidity. Okay, so we already have 1, 2, 3, 4, 5, 6, 7. We are already halfway through the cycle. So on the next 14 daily or on the next 7 daily bars, I expect price action to be bearish on this gold chart, since it already reacted on equilibrium of the previous 20 days range. So expect it to trade to this low as the sell side liquidity or zone. So my bias is still bearish on the daily time frame. So today, this is the only concept I'm going to be sharing with you. Of course, it's two concepts. We have the 20 days if the data ranges, if that means interbank price delivery algorithm. If you are an ICT enthusiast, then you know that. But if you don't, you are not into much into ICT concepts, just forget about it. Okay. We have the 20 days if the data ranges, it's this marked with these vertical lines. And then we have the fractal. Okay. If you see the fractal model form on the 4th day, you should be looking for buys. Remember, it can be a sign of retracement or a reversal or a continuation of the trend. Okay, so since it closed here on the 3rd day, on the 4th day, that's why we were looking for sell trades today, which of course we missed out on. No problem. There will always be an abundance of opportunities in this market. So tomorrow is Thursday. We expect to have some trades, and also on Friday. So that's all. Maybe backtest using these 20 days if the ranges and the fractal on the daily chart. When the fractal forms, you don't anticipate that it is going to reverse until it does. Okay, so you submit to this fractal right here. This is a fractal that starts a bearish order flow. So you submit to that until it is invalidated, and it will only be invalidated by maybe 1 or 2 up close candles that violate this high. So, and as long as this high holds, we are still bearish on the daily time frame. So that's all for today. I hope this is a lesson that will help you in determining the daily bias. Of course, you're not going to be right every single day. Inside a bearish order flow, we're still going to have some buy candles like we had here. So if you went into this day looking for uh, a bearish setup, you will have gotten it wrong unless you are taking it inside this daily fair value gap right here. So that's all for today. I hope this lesson is impactful to you. So remember to subscribe to my YouTube channel, and see you on the next update. Good trading.